Welcome to my YouTube channel. So today I'll be presenting to you my forecast for this trading week I had as for 19 April 2026 on GBPUSD and EURUSD. As you all know that these are the only two assets of one asset class that I stick to, right? I only trade these two currency pairs, right? They are also correlated. So forgive me, I apologize for not being posting lately. I think it is due to some errands I had to be running in the past weeks, but I'm going to try my best to start posting, right? So without wasting much time, let us dig into the analysis, right? My expectations for this coming week. So first of all, everything starts with time frame selection, right? Time is more important than price. So as you all know, this is 19 April, right? Meaning that we are now moving into the last half of the month, right? We have 2 weeks ahead of the close of the April monthly candle. So since we are in the middle of the month, the best time frame to start with would be the weekly time frame, right? Also judging that my draw of liquidity for the monthly and the 3 months and higher is still intact. If it was given that my draw of liquidity was taken, which is my draw of liquidity on the monthly, then I would be forced to be starting off from the monthly. But since my draw of liquidity is intact for the monthly, I can rightfully start from the what? From the weekly time frame. Okay. So after I have concluded the appropriate time frame selection, then I have to continue with the technical price-based perspective framework, which the first stage is order flow determination, right? So defining order flow starts with defining the current trend, right? As you all can see that price has been literally bullish since the end of March. Price was bullish. You can see price disrespecting the bearish PDRAs, right? These bearish gaps, which should be responsible for propelling price downwards if the order flow was bearish, are being disrespected. Even this order block right here, you can see it's valid because it follows these previous valid order blocks that purged liquidity. So this shows absolute bullish intention in the market, right? Enough to give me conviction that price is bullish, right? Then secondly, what you can do to define the current trend is to look at the rejection of highs and lows, right? You can see that from right here, you can see how price rejects below this candle low, right? I believe we can all agree that a candle low is a good example of a low, right? Highs and lows come in different forms. It's either candle highs, literal candle highs and candle lows, or swing points, right? That you all know. Of course, a swing point is created when a certain candle's high or low is purged, creating a V shape, right? This is what you call a swing, right? Then we also have major swings, right? Or intermediate swings. These are swings that are formed after a previous swing was terosubed, right? Yeah, that's how intricate swings go, right? So then another thing is SMT, right? Looking at the symmetry of these two pairs can tell us a lot about the current order flow. You can see that this low, 9 March 2026, it was purged, right, on GBPUSD. And you can see on the opposite pair, Euro USD, the correlated pair, that same low is unpurged. So since it is unpurged, then that's what we call an SMT. And this is an SMT that favors for the bullish side, right? And the bullish side means higher prices, right? So with all brought together, it is safe to conclude that the current trend is bullish, right? Now, what's much more important is what follows defining the current trend. That is determining the future trend. So when it comes to defining the future trend, we've looked at the higher time frame order flow aspect of these two charts. The first thing is looking at the trend of the higher time frame. If you looked at the outlooks that I sent you like last week, right, from the 3 months monthly, those are the higher time frame aspects of these two pairs. You see that I safely concluded things to be bullish, right? Of course, I anticipated and I still anticipate a short-term bearish movement, but in terms of trend, my trend has always been what? Bullish. So this gives me conviction that this current trend that I defined is a lot of probability to continue as it is, right? Because of the higher time frame aspect of the trend. Then we move on to key levels, right? Are there any higher time frame key levels that conflict with my current trend? Nope. There we are not we have not approached any key levels, right? We actually smashed through a recent monthly rejection block, right? Yeah. If you want to see it, you can just look at my previous outlook. I clearly indicated that monthly rejection block opening, and it was disrespected. So with that brought together, it gives me conviction for higher prices. Then the last thing is my monthly time frame bias. It is bullish. So once again, I have more conviction to continue bullish for these two pairs. Then another important aspect of the technical price-based perspective framework is range dynamics, right? We have to look for consolidations. You do know that the market consolidates 70% of the time. So looking at these consolidations gives me a lot of insight, right? Because when the market consolidates, it has only two outcomes. It's either there's going to be a fake breakout or there's going to be a manipulation, aka turtle soup, right? Or liquidity bridge. And if there's a liquidity bridge, then price is going to reverse. The only outcome of a manipulation is a reversal. So as you can see, yes, look at Euro USD. You can see that price initially created this swing high and this swing low. Then after the creation of this major swing point, price went on to create another swing high and another low right there. This is the clear definition of generation of interest, right? Price is creating substructures in between two major swing points, right?